Hey guys, welcome back. So in today's video, I'm going to be going over why the heck IRobot's stock price took a massive dip yesterday, and after hours the stock price was down over 20%, and then I'm also going to be going into why the heck I as an investor would use this as a buying opportunity to buy into a growth name that is slowing down their growth, dropped 20%, the shares are depreciating, they're in a tailwind for this entire year. Why the heck do I see that as a buying opportunity? So I'm going to be getting into all of that and, kind of going into what happened in the ER, what the investor's reaction was, and then as my, perception of an individual investor, why do I think there's a lot of value there? And then I'm going to be giving a couple of insights as to how I see this space going over the next couple of years. So if you guys are interested in that, make sure to hit that like button, hit the subscribe button. It really means a lot to me. We just crossed 900 subscribers here in the channel, so that's a great milestone. Thank you for everybody that contributes and supports this channel. It really means a lot to me. And make sure to stick around to the end of the video, and I'm going to be going over, just kind of the little tidbits that I think are key takeaways that anybody investing in a company like IRobot should really keep in mind. So without further ado, let's get in the video. Alright, so to start things off, I want to take a look at my notes, because I'm one of those guys, I'm kind of old-fashioned, that I either need to type out my notes or I need to physically handwrite down my notes whenever I go to buy or sell a position. So whether that's a trade or whether that's a long-term investment, I need to put my ideas and my logic on paper so that way I can kind of mitigate that emotional bias that a lot of investors have. I know obviously it's not foolproof, and I'm not too much of an emotional guy, but I definitely think that investors oftentimes, especially retail investors, they will buy or sell out of a stock based off the headlines. They get more frenzy. They see the stock price either going up or going down, and they think they just have to get in or out. Mainly due to fear of missing out, or they just think all their gains are going to be going away. And so I have found that if you put down the pros and the cons of what you're doing, whether you're buying or you're selling, you put that down on a piece of paper and you read it back to yourself. And then you wait, say, an hour or two, and then you read it back to yourself. And it still makes a lot of sense. Odds are that's, your mind's not going to change based off of, just kind of hysteria. And so that's kind of what I did for IRobot. And so running down the list for, kind of what was my thought process going on that is I took a look at the company. Now, for those of you that don't know, I've followed IRobot for years now. They're based just 20 minutes away from where I live. I live here in Lowell in Massachusetts, and they're based, I think just 20 minutes south on the highway. And, I've met people that work in this company. I've had classmates that had internships there. I am pretty well, exposed to this company in particular. And so I followed along for a while. It was actually, I think, my first video here on YouTube. I talked about IRobot as a possible great investment. That was over in 2018. And I did not actually add it into my personal account at then. I did own a little bit of it in 2017. I did a quick trade with it, but I did not have it in 2018 when it had that massive run up to over $120 a share, unfortunately. But, now I saw this massive sell-off after hours, and then I looked into the company, read the ER report this morning. I posted about it on Instagram. I actually, post about when I'm thinking about buying a company and then when I actually do on Instagram. So if you guys want an update on what I'm going to be doing with this portfolio, I'm not selling a subscription or anything like that. If you guys just want to see what trades I'm making, I just kind of post about it on Instagram. So if you guys are interested, make sure to follow me. The link's down in the description below. So I looked at this and I just thought, it doesn't make sense. It doesn't make sense. I get why investors were upset, but 20% didn't make much sense to me, so I wanted to start my position. And then you look into it even more. So on the top line, in terms of the good things, top line grew at a 9% clip. Their international sales were exploding, so over in Europe, they were up over 25%, and in Japan and other smaller Asian markets, they were up over 40%, and that's essentially, the market that IRobot's been really focused on getting into over the past couple of years. I just talked about it last time, again, over a year ago when I talked about IRobot. They were heavily buying areas in Japan to really start manufacturing over there. So the fact that they're growing at a 40% clip just a year later is freaking phenomenal. They are, now experimenting with the new lawnmower that they're doing over in Germany, and that's going to be ending testing pretty soon, and then they're thinking about rolling it out as early as next year. And to backtrack, for those of you that don't know, IRobot is the company that makes the Roomba vacuum cleaner. I'm sure you have seen memes about it. I'm sure you've seen cat videos of the cat rolling around on it. I'm sure everybody knows roughly what a robotic vacuum cleaner is and most people refer to it as a generic term as the Roomba. They also make the Brava, which is essentially the same thing, but it's a mop and it's for like tiles and like your bathroom. And this company, just kind of sells that and has created a pretty strong moat around that space for themselves. And now, to caveat that, everybody thinks like, wait, there's a bunch of people like Shark and Ninja and all these different companies are trying to enter into that space and make their own robotic vacuum cleaner. IRobot can't charge a premium. They don't really have any moat. Like, they're just gonna get their share whittled away. And actually, the main play with IRobot in terms of a defensive play is that IRobot actually has over 1,000 patents just in this space. They have been in this space longer than everybody, and they have made sure to patent everything that they do along the way. So they have won multiple lawsuits, and they've been able to push back product launches from other companies, and they've really been able to solidify their dominance in this space just due to their massive wall of patents. And that just remains to be the case, and I'm sure that they're going to have that same wall of patents and using that same technology in all of the smart devices that they make. So in my opinion, the secular trend is if you think people are going to continue to get lazy and you think people are going to be willing to spend money on something that allows them to be even lazier than they are, I think it's a safe bet that smart home appliances are going to be more and more of a common thing in the future. And again, you have to keep this in mind. Like, this is an emerging space, and you look at a company like IRobot, and it is, trading at around $1 billion market cap. And, you have companies like Amazon. They could buy it for the same price as, like, you or I buying a Coca-Cola. like, this is like a chump change company for a company like Amazon to buy it at even 300% its value, its current value, just to make, like, say, an Alexa-based Roomba. Like, there's so many opportunities in terms of acquisitions, the market growing, and then also just this company with its amazing balance sheet just growing from here on out. There's a lot of potential upside. And so now we also have to look at, okay, what's the downside? You really have to assess when you invest in a company like IRobot, any tech company, especially a small to mid-cap company, and especially one that is in a consumer discretionary space, you have to realize that, okay, there's a lot of risk that's involved. There are a lot of people that are going to try to enter into this market, especially if they think that it's going to grow as quickly as I do. And, there's also the factor that if we hit an economic downturn, which everybody seems to be assuming we're going to be hitting in, say, the next year. Granted, everybody's been assuming we're going to hit a recession for the past 3 years now, if you listen to headlines. But beside the point, if we hit an economic slowdown, no one's going to be running out and, buying a robotic vacuum cleaner. Everybody's going to stick with the generic vacuum cleaner they have, or run out and buy a, say $50 to $60 little cheap thing that they can, just kind of get the job done at their house and never think about it. So, like, you have a massive, volatility risk based on the overall economy, mainly focused on the consumer. Now, based off of, kind of what the Fed's been saying, what Target CEO has been saying, and a lot of retail establishments have been saying, even during this volatile time in the market, is most of them see the end U.S. consumer being pretty strong still. And so the really only threat right now that IRobot has to it is the Chinese tariff situation. Now, the tariff situation is the main reason why the stock sold off 20%, and that was because the tariffs year over year went from being about 10% to 25%, and IRobot, lo and behold, makes almost all of their Roombas in China. So the way a China tariff works is that it normally isn't the Chinese that are spending the money for the tariff. It's the fact that IRobot's consumers are now going to have an inflated price tag. And so what IRobot did up until now is that they just passed that on to the consumer. They just increased prices 10%, and they said, hey, you're just going to pay this now if you want your Roomba. But now looking at the 25% tariff, they're actually saying, okay, we need to conserve our market share and we need to grow our user base, so we don't want to keep inflating prices right now. We're going to eat that. And so that's going to lower their margins. And investors do not like to hear, especially from a growth company, that margins are going to shrink, because that means that less money is going into earnings per share, and that means less money is going into the investor's pocket. As my opinion kind of stands still with this, and what I think most tech companies, especially when they're relatively small, need to be, is that you need to keep your consumer base alive. And I personally think that in terms of a business standpoint, if you were the owner of this business, and you're looking at it not as a stock price on a ticker sheet, but you're looking at this like, I am operating this, and I plan on operating this for the next 10, 20 years, you need to have a really strong consumer base. And I think that, having the company eat the tariff situation until that gets sorted out, and allowing as many consumers as they want to buy these Roombas, because it's such a new market and you can't really have a lot of pricing power in a market that you don't know really has any stronghold yet. I personally think that that is the best business opportunity. Is it optimal? No, obviously not. People would much rather have, you know, the ability to increase market share and increase margins, but that's just not the world we live in. And so I think that the stock is getting beaten down because of the China tariff situation. And now personally, I'm one of the people that I do not think that the whole tariff situation is going to continue to escalate, let's say, longer than a year or two. I personally think that around the election, Trump is either going to get a lot easier on it, or China, once any of these countries start, like, you know, really facing a recession around the corner, I think they're going to get a lot more, you know, they're going to give each other a lot more leeway in terms of bargaining what the heck they want from one another. So I'm personally not too worried about that in the long term. And so that means that that's a possible lever that happens, that it's definitely speculation. I wouldn't make the investment off of this, but that means that if the tariffs either go back to 10%, or if they go away, or if IRobot gets an exclusion from these tariffs, you know, the stock price can go up 30 to 40% in a day just based off that news, let alone what the actual business can give you. So that's something that I just think is, you know, kind of, it's stacked in my favor, that so much of the pessimism that has been talked about in the stock market forever is now priced into the company. And I think that right now, if you think the company is well run, if you think they have a bright future ahead of them, and most of the pessimism is priced in, to me, that's a screaming buy, in my humble opinion. All right, and now just to wrap things up, I just want to dive into the numbers real quick, and I want to show you my free cash flow model. So you guys know that I've been using this a lot recently, and, you know, based off of the conservative estimates I put into the company prior to this earnings report, I got a very conservative value of the company. If things, you know, all of a sudden took a really sharp turn with the China trade war situation, I wanted to buy the company at between a $60 to $45 range. And now again, up until this point in time, the shares were trading at $120 a share, so I always had to stay away. So the second that it took a massive nosedive, I looked at this model, I tweaked the numbers to assume the worst case scenario from the earnings report. I was still getting a share price of above $50 a share, so I knew that right there was a golden buying opportunity, and I placed my order. And then sure enough, as you guys saw on my Instagram page, if you guys follow me there, you know, it's only been one day and I'm already up over 10% on the company. So, you know, that's kind of like just kind of what happened with me with IRobot. I'll definitely be giving updates if you guys are interested with this company from here on out, but that's what I really wanted to go over, like, you know, how I was able to make such a quick return. You know, it spent years researching the company, but in just one quick day, I was able to make a pretty sizable return that I think will grow pretty well into the future. But that's kind of an insight, again, as to how I place my personal investments, not as an investment advice, but just so that way you guys can see what the heck someone who's been in the stock market for over 6 years now, how they play the game, and also, you know, what works for them and what has worked for them in the past. So hopefully you guys got some use out of this. I hope you guys liked this type of video. Let me know if you guys like my new setup. I kind of just got lazy and now I sit at my computer. You know, give me a thumbs up if you watch Rick and Morty. And if you don't watch Rick and Morty, or, you know, lose IQ, I don't know. So thanks again for sticking to the end of the video, guys. Let me know what you guys think in the comment section down below. I would like to, you know, kind of get that community going again and really have some interactive conversations with you. And that's it for this video, so I'll catch you guys in the next one. Peace.